Yeah, I think you're right to start with inflation because it's clearly the biggest driver of markets at the moment. When inflation feels like it's going away, markets get a lot more positive, and vice versa. And in the UK, I think we do face a particularly sticky problem. As you say, headline inflation now is starting to improve, but core inflation is still picking up. And it's really down to what you're putting in both of those different baskets. So it's really energy base effects which are helping to bring headline inflation down. And what I mean by base effects is that when you compare energy prices today to where energy prices stood a year ago, that year over year comparison is now starting to help headline inflation move lower. So we expect as the year goes on that you'll continue to see that improvement. Because remember, it was really in the spring of last year that energy prices were surging higher as a result of Russia's invasion of Ukraine. So we do expect that headline inflation number to continue to moderate over the next 6 to 12 months. Core inflation is more sticky, and that's really being driven by what we see in the domestic UK economy. So when you think about what's going into core inflation, it's services activity, it's some goods activity, and it's really the tightness of the labour market and wage growth in particular that we think is fueling core inflation today. Because when jobs are plentiful, when businesses are having to pay up to get their hands on the workers that they need, you tend to find that that then leads to people earning a bit more. They go out and spend a little bit more, and you get left with this very sticky core inflation. So at the moment, the Bank of England, I think, is looking at the inflation picture and saying, well, we're happy that the headline numbers are coming down, but actually we probably have a bit more work to do until we get more confident that that core number and that domestically generated number is also turning lower.